Ever wondered what stock capital is? It's a term that often floats around in the financial world, and yet, it may seem like a complex concept to many. But fear not. Today, we're going to break it down. Imagine a company as a giant pie. This pie, however, isn't filled with apples or cherries, but instead, it's filled with value. The value that the company has, derived from its assets, its operations, and its potential for future earnings. That's a tasty pie indeed. Now, this pie isn't for one person alone. It's divided into many slices. Each slice represents a share of the company, and when you buy a slice, or rather a share, you're buying a piece of the company's value. This is where the term stock capital comes into play. Stock capital, also known as share capital or equity capital, refers to the amount of money a company raises by issuing shares of the company. So if a company issues 1 million shares at a price of $10 each, the stock capital of the company is $10 million. Simple, right? But why do companies do this? Well, they do it to raise money. Companies need funds to grow, innovate, and compete. They could borrow the money, sure, but that comes with debt and interest payments. By selling shares, they get the money they need without the extra baggage of debt. It's also a win for investors. Buying a share doesn't just mean owning a slice of the pie. It also means sharing in the company's profits. If the company does well, the value of the share can increase, and the investor can sell it for more than what they paid for it. But remember, the value of a share can also decrease if the company doesn't do well. Stock capital, like any other investment, comes with its risks. So, there you have it. Stock capital is the money a company raises by selling shares. It's a way for companies to fund their growth without taking on debt, and for investors to potentially profit from the company's success. It's a slice of the pie that can be sweet, but it can also be sour. Always remember to do your homework before investing. Remember the key points about stock capital. It's the money a company raises through issuing shares. It's a way for companies to avoid debt, and it's an opportunity for investors to share in a company's success. So the next time you hear the term stock capital, you'll know exactly what it means. It's not just a piece of the financial world's jargon, it's a slice of the company's pie. And who knows, you might just be tempted to take a bite.